Let's talk about the 7 types of personal financial accounts every growing, profitable business owner should know about and consider having in place. These are all important family wealth building tools. The 7th account type is my favorite and the one very few business owners know about. At the very end, even though it's not for everyone, I want to share a sort of bonus 8th type of account that I call the tax slashing triple threat. Now, as a whole, this is the same account planning framework we use with our business owner clients, and I've had a number of these conversations just in the last few weeks. All this is important because knowing about and using these account types may help you minimize taxes this year and even more so in the years to come. And your financial life will be more organized and you'll feel like you're making quick progress to your most important goals in life. So let's jump right in. The first 2 account types are easy. They're a local personal checking and local personal savings account. You probably already have these, but here's an important point to make right now. The local personal savings account is not there so you earn a lot of interest. The goal of this account is to serve as a local holding tank for very near-term big expenses, and more importantly, a place to easily sweep and move excess cash over from your checking account so you don't spend it too easily. You can keep a portion or all of your emergency fund in this local savings account, or you can keep that emergency fund in the 3rd type of account, which is a high yield savings account. This is typically an online bank that can get you a higher yield than a local savings account, but transferring funds might take a business day or 2. This is where you can keep your emergency fund and cash for other big expenses that are coming up, maybe in the next 6, 12, or 24 months, or whatever makes you comfortable. Next, you'll also want to have an investment account that is not a retirement account. This 4th category is often called a brokerage or non-qualified account, but basically it's just a standard investment account that can hold short or long-term investments without having a potential penalty for accessing the funds like a 401k or IRA. If you're saving aggressively towards financial freedom, you may be maxing out your contributions to retirement accounts. If that's the case, then this non-qualified brokerage account is the next place for you to save and invest. The 5th category is PreTax retirement accounts. These are your traditional 401ks and IRAs and SEP and simple IRAs. You probably already have at least one of these, so I'm not going to go into a lot of detail here. But the 6th account category is also a type of retirement account, even though it's the less common post-tax Roth category. You can and probably should have a Roth component to your 401k, as well as even a standalone Roth IRA. Now, account type number 7 is the Donor-Advised Fund, or DAF for short. This is my favorite type of account to talk about. I can't go on to all the details here, but if you do at least $5,000 to $10,000 of annual charitable giving, then you should consider establishing a DAF to simplify your life. And there's some tremendous tax planning opportunities with a Donor-Advised Fund that your CPA or financial advisor can help you understand. The 8th type of account you need to know about is the Health Savings Account, or HSA. There is a catch, however, because you can only contribute to that account if you have an official high deductible health plan. But if you do, then you can contribute to this, what I call tax slashing triple threat type of account. Here's what I mean. You get a tax deduction for your eligible contributions no matter what level of income you have. You get tax deferred growth because you can invest your HSA account balance in many of the investments you're already familiar with. And there are no taxes on distributions for eligible medical expenses. There's just no other account like an HSA account. So in looking back over all these accounts, one probably stood out to you. So make a note to look into getting that account set up right away. Other than the local checking and savings accounts, a fiduciary financial advisor should be able to help you establish any of the account types with a best-in-class investment custodian or a bank. Now, I'd love to know what pressing questions you have about any of these account types, so please leave your questions in the comment section below.